Hello, this is the TradeSight U.S. Stocks and Futures Market Preview and Domestic Economic Data Roadmap for the week beginning Monday, the 20th of January 2014, ending on Friday the 14th. Friday the 24th of January. Hope you're having a good trading week. Charts, as usual, brought to you by eSignal 11 while we do these presentations. And here's a look at the S&P 500 index. You can see really tried to push back to highs. I think we got just short of a new closing high here on Wednesday after a sharp sell-off on Monday, bounced on Tuesday. The sell-off on Monday really looked like it might be the beginning of a plunge in the market. We did options unraveling very clearly on Tuesday. That was kind of a surprise. I really wasn't expecting that, and that's what reversed us back up, and that sort of squeezed us Wednesday. But by that point, the options closings were done for the week, and that put us pretty much on a flat pace for Thursday and Friday, both very flat, and a very late day sell-off on Friday, I would say. So we've gotten options expiration for the month of January out of the way on the main options cycle, not the weekly options, obviously. And then we've got a 3-day weekend here. So the key here is that this next week, stocks are closed on Monday for the bank holiday of Martin Luther King. So we will be opening on Tuesday and only having a 4-day week. Here's the, so in general, we've got a new count going. We've got a new 9, and we're working on the new seeker count on the S&P chart. So we'll see what that leads to. The Nasdaq side, on the other hand, definitely got a new closing high on Wednesday and Thursday. Came back over and filled a little gap from Wednesday's open on Friday on options expiration. So far we haven't received any signs of a rollover in January. I do want to point out, I mentioned several times, one of the things that's sort of a rule in the markets is if the first 3 days of January go in one direction, and here they very clearly were down 1, 2, 3 days down, the rest of the month usually closes higher, and so far that's been the case. I will point out that the first 2 days of January were that Thursday and Friday. New Year's was on a Wednesday. They were very light volume days, but anyway you cut it, the first 3 days were down this year, and usually that means upwards action after that. So we'll see what it actually ends up being by the end of January. But right now it certainly looks positive. You can't say that there's anything negative going on or that the market's rolling over in any way. We had an indication Monday that it might have. We started to head down. But we got the very clear options unraveling move on Tuesday that moved us back up, and that was that. So we ended up with new highs even on the Nasdaq side, and almost the same on the S&P side. Take a look at the Biotech Index here. Look at this. About to have a new 9-bar setup, which is going to recycle the current seeker count, and very, very strong week for biotechs. And the old expression is, as go banks and biotechs, so goes the market. You know, you look at those first 3 days of January, which were down for the broad indices, barely down for the biotechs, but then right when that was over, boom, they took off and ran. Volume in the market has been very good. Let's take a look at the Nasdaq volume number. And look at how all of a sudden we jumped up over 2 billion shares most of the days so far this year. And if I actually insert, we like to use a 10-day moving average on this one. If I actually insert a 10-day moving average, look at this. All of last year, we couldn't barely get the moving average over 1.8 million. We had some decent volume in late October and November after the usual poor volume in the summer. Actually, the summer got worse than usual. By August, look at the average dipped almost to 1.3 billion shares, the 10-day average. And you always get the 5 days at the end of the year very poor. We know that, and that brings the average down. That's just standard. But to go from that to this so quickly, again, the first 2 days of the year were that Thursday and Friday. After the holiday, nobody was back yet. And then, boom, just suddenly everybody's back. And you look at that volume. Look at this average number. We're over 2 billion shares averaging over the last 10 days. And that's basically 10 days of this action. In other words, we've had 2 full weeks of the year. So that's pretty impressive. We did not get the Nasdaq volume average over 2 billion shares back in last year at all. And I should point out that even though there were some dull days the last couple of weeks, there have also been some very good stock moves. We've had some great moves in a Netflix short this week that was great, a Goldman short this week that was great, some longs that ran like crazy. We're definitely seeing movement in the market, and that comes with volume. That's what we've been waiting for. Let's take a look at the intra-day action on the markets this week. Here's the ES, the S&P E-mini futures in 10-minute bars, and this is a real interesting chart with our Comer tool because as you can see on Monday we had that sharp sell-off, and we actually made some good money on the long side Monday. Rich had a huge long call on Apple, Google, but then the market rolled, and look what happened. We got a 13 buy signal, and that ends up being the turning point and the low of the week is that 13 buy signal. We bounce off of that, and then come back up on Tuesday, and this is that options unraveling move I mentioned. And once you're done with that, you're kind of done for the week in options week. Once they get done with their unraveling, the big players are done. And it's not shocking. I guess maybe part of the reason they go a day early, usually that's on Wednesday, go a day early this week is people leaving early anyways for the long weekend. So you end up with a Wednesday being a little bit up, nothing too major, Thursday being impossibly flat, Friday being impossibly flat until a little sell-off late in the day. And, you know, I got to point it out, the only support and resistance point from our measurements that's on this chart is the static trend line right here, this red line, and that is exactly what we hit basically within a tick right at the late session on Friday. So interesting technicals, the Comer getting the low on Monday, and then the static trend line on Friday. Here's a look at the Nasdaq side, just so you can see. Look how impossibly flat the Nasdaq was Wednesday, Thursday, Friday. And again, if it wasn't for that little sell-off in the last hour, maybe somebody's expecting us to come down a bit next week. Wouldn't have been very exciting at all. Here's a look at Apple. Got a little bounce early in the week. It was actually up Monday when the market was down. That's just what Apple does sometimes. Gapped all the way up, got basically to the green static trend line, and that was it. Rolled and then back down sharply on Friday. Kind of unusual for options unraveling for that to happen, or options expiration. Here's Google making new highs, just chucking along. Tesla, another stock that we've been following a lot lately, setting sort of a bull flag up. Here's a look at Netflix, which didn't have much of a week, although we had a good short in it on Wednesday. Amazon been dead flat here. So it's mixed what we're seeing out there, but certainly if you're looking for weakness in the market, we don't have it yet. So let's look at the data that's coming out this week and prepare ourselves. Remember, Monday, we are closed. Tuesday, no data. Wednesday, 7 a.m. Eastern Time, MBA Mortgage Index. That's a non-factor, non-event. Thursday, continuing jobless claims, initial jobless claims, FHA Housing Price Index, existing home sales, leading indicators, natty gas, and crude oil inventories. None of that's super important, but it's all there on Thursday this week, and then no data on Friday. Expect probably a slow start Tuesday, people coming back from a long weekend, a little slow to get going, and plus you're starting a new options cycle. We are entering the core weeks of earnings here. It's kind of a mixed bag, but we did already have Intel, for example, but we've got a lot of earnings this Tuesday, Wednesday, Thursday. It's kind of odd spacing this time. With Microsoft, usually it's the last day of core earnings, but because of when the month started and all that, we're actually starting here. Microsoft's still doing their earnings this Thursday, but the core 8 days of earnings are actually this Tuesday, Wednesday, Thursday, Friday, especially the first 3 days there, and then the following week, Monday through Thursday, ending Thursday with a lot of economic numbers. So we're in the core 8 days of earnings. That's often sort of a different environment for the market, and a lot of traders sit that out or trade a lot less size because you get a lot of gaps, you get a lot of new, rumor moves, news moves, anything in the sector flinches, and it moves the stocks. So we're in that time frame, and we're going to start looking at these earnings as they come out. Be the first projections for the year as to what everybody's seeing coming economically for this year, and so it's something to watch. Obviously, a little bit different environment here for the next week or so. But as long as volume stays up, hopefully we'll have some great opportunities like we've been having, and hope to see you in the lab, help you make some money with our calls. Have a great long weekend and a great trading week.